Oh, good afternoon. So just to, for those in the audience not too familiar with GoGold, I'll just kind of hit on the high points here in this 15 minutes. I myself have been in Mexico now for 28 years. The company is very Mexico-based. Over that time, we've built 4 mines in Mexico, 4 companies, and over that time raised about $1.5 billion of equity for these companies. We've had a model where we've dealt a lot with the private families in Mexico, kind of found the off-the-radar assets, and things like way back in GoGold 20 years ago, where we initially bought the asset for $15 million. We built a mine there, 250,000 ounces a year of gold equivalent, and had a market cap in the billions. Mex Gold, we bought from a private family for $20 million. We sold it 3 years later for $375 million. Nayarit, a smaller deal, entered that about $40 million market cap, and we sold it for $80 million. And now GoGold has been the company for the last dozen years. So in GoGold, well capitalized, great balance sheet, 330 million shares, 76 million US cash in the bank, and a big receivable from the government for 22 million US, which we anticipate we're going to collect a large portion of that over the next 6 months. Also, we're pretty heavily, not just retail held, but institutionally held at about 50% institutional. And also, as far as management, friends and family, myself as the second largest reporting shareholder, we'd have about 20% management insiders holding shares. And institutions you might recognize, to name a few there in front of you. So GoGold, in line what we've done with the other companies. In GoGold, we've had, the typical one would be Santa Gratuitous. We bought that. In 2014, we spent $9 million to acquire it, and then $11 million in studies and drilling. Then we sold it in 2017 to Agnico Eagle for $95 million. Parral is our operating asset. We acquired that in 2012, and 2014 in June we had our first pour production, and we've been processing there for over 10 years now. And then we have really the flagship of the company, which is our development asset in Jalisco. And that asset, we're just finishing a definitive feasibility study now, and we're shovel ready. With a permit in hand, we hope to have by the end of the first quarter in 2025. We'll be breaking ground and building that underground mine. So just a little bit, I'll focus mostly on Los Ricos here. That's our development asset. Just for scale, that's about 35 kilometers. We have our Los Ricos North and Los Ricos South. We started in March of 2019. We acquired this for $7.5 million. Since then, there was 25 concessions then. We've acquired another about 25 concessions. And actually about 20, we're up to about 45 concessions now. Also, we drilled about 200,000 meters, and we defined in resources, total resources, all categories, about 280 million silver equivalent ounces. We've completed 2 economic studies, Los Ricos South, which is the development part of the asset, which is shovel ready for the first quarter next year to build. And also in Los Ricos North is what I describe as an early stage PEA. We have that study published up there as well. So in Los Ricos South, the study would show the PEA level study was about 400 million NPV. And we would have also in Los Ricos North over 400 million in NPV in Los Ricos North as well. So in that definitive study, we probably will have that published in December. If not, it will be mid-January. But we've essentially completed the study. We're waiting for permit. So while we've been waiting, really we pretty much got all the CapEx nailed down, and as far as the OpEx, the CapEx is 75% costed with quotes, and the OpEx gone out to contractors, and it's costed as well. But OpEx, CapEx is all done. Really right now what we're doing is just some optimization. The mine is a 2,000 ton a day underground mine, and it's really all best practices here. What we've found over the years, even before people were talking about ESG, really if you want to build mines, you have to operate in that manner anyway. The ESG that we would do is just putting everything that we've always done in a report, and good relations, good social license with the community, and we have that here. Now we've nailed down some of the real critical things right now as well. Always power. This mine will use 14 megawatts of power. So there's a hydroelectric dam 36 kilometers away. There we've put down $2 million. We've secured the contract. We can use an existing right-of-way to put in the new power line, and that whole project's about $7.5 million. Water. With water, with the local community, the owners of the surface rights, they have a small dam. We have an agreement with them where we're putting some capital into their dam, raising it by about 2 meters. And that'll supply the 450 cubic meters of water we need a year. And the contract with the local landowners will give them a source of revenue as well. So we have a long-term contract to buy the water off them. So everything we do, we want to do deals that bring some revenue to the community and tighten the relationship with the community. The mill is very conventional. It's just a grinding CCD mill with cyanide. We produce a doré product, and you'll notice the name is GoGold. So, well, GoGold, silver and gold. In actual fact, we are a silver company more than we are a gold company. We produce about 60% currently in value silver and about 40% gold, and this mine will be pretty much the same. We anticipate we'll be producing about 8 million ounces of silver equivalent a year. In the PEA, which was planned as an underground mine, the all-in sustaining was just over $9. Now, I'm sure a lot of you have heard that there's been some issues in Mexico around permitting open pit mines. So what we decided 8 months ago is that this mine had a component that was underground. It was starting as an underground mine. We decided to permit and do the definitive feasibility study as an underground mine. It'll raise the all-in sustaining cost a bit, probably in the $11, $12 range. Still extremely good all-in sustaining cost. The study's yet to be published. We'll have to wait for the study to say exactly what that is. But we're projecting it'll be around that. And really, a little bit of a hit to the CapEx, or sorry, not the CapEx, the NPV on the project would probably come down about 50 million. I'll show you something in a moment that I think will make up for any loss in the net asset value. And that has to do with some real brownfields exploration that we're doing near the underground mine. So we hope to have that permit by the end of the first quarter. And then we'll be breaking ground with our ramp. The build, and we will produce some ounces while we're building at the latter stage of the build, but to reach commercial production, it'll be about 30 months. And you can see as the mine develops, as we go through the years, colored by our reserves by year. Important to note here that this is not narrow vein. The average mining width here is 11 meters, and we are utilizing what's called long hole, sub-level long hole longitudinal mining, which is very productive. It can produce easily those 2,000 tons a day. So we go through the years, and it's 12 years of underground mining at that commercial production rate of 2,000 tons a day, and about 8 million ounces of silver equivalent a year. And those are all our reserves. What I would like to show you is something else we're working on right now. Now this mine operated originally, everything you see there in color are our reserves that will be coming out in the study. Everything you see here in gray was a mine that had already existed there and operated between 1908 and 1929. Well, they found the same thing that we're finding, and that's that we see that all the real high grade is bound by a horizon. And we saw that was pretty much the horizon of the high grade. And then the structure got narrower, and they continued to mine down that structure. You can see it here. But then in 1927, they made a discovery down there, and they got back into a real high-grade zone where they were seeing grades up to 15 meters of 1.5 kilos. So that was 1927. Unfortunately, there was a revolution in 1929, and all the foreigners left. But what we inherited with a bunch of searching was an archive in the US that had all the old data there. So we know that there's something down there, and while we're waiting for the permit, we decided we were going to put in another 20 holes. You know, we already have over 100,000 meters of drilling here, but some deep holes. And those deep holes are underway. The first hole was aimed right down for where they were, about 700 meters. And actually, I was talking to the team last night in Mexico, and we just intercepted the zone. So in the new year, we'll have some results from some of these deep holes. But certainly, if we can show down there that there's another horizon, and we already have a 2,000 ton a day mill, and we're already in a mining operation, obviously that could have an enormous impact on valuation if we have another one of these down here. So that's one of the big focuses. The other focus is, as we're preparing to build this, we are arranging for the debt portion of the financing to build this mine, which will be about a $200 million capex. Now, we had started with about 8 term sheets. And we have it right now down to kind of the 3 best. And our focus is not just the lowest cost of capital, obviously that's the focus, but also that we want to have flexibility in the capital. Because our plan is that we're building Los Ricos South in 2025, we'll start, but we also have Los Ricos North. So we want to have a budget available to us while we're building Los Ricos North, where we can, or building Los Ricos South, sorry, we can go up to Los Ricos North, complete the additional drilling that we have to do, complete the additional engineering, and get it permitted with a definitive feasibility study so that in 2027, we hit full commercial production in the south, we're ready to go in Los Ricos North. And that's our in-house pipeline to moving from approximately 8 million ounces a year in Los Ricos North, which has a 413 million US NPV, moving to more like 15 to 17 million ounces a year. So we have that all in-house, and what about permit? I mean, everybody's talking about permit in Mexico. And what's the latest and greatest? Well, I'll tell you that I was in Mexico for a meeting on November the 8th, and myself and 10 other mining companies operating in Mexico, Ignico, Alamos, to name a few, Torex. And we all agreed that it was a very positive meeting. It was discussed permits. It was with the Department of Economy, the Environmental Authority, and they stated clearly that they're processing the permits now. They're going to move the permits, and that it'll be the underground permits first. But we, personally, I had the feeling from that meeting that as far as open pit permits, there will be a road path to open pit permits with a new law that they will probably pass in the new year. And they recognize now that open pit permits are essential to their economy, and there will be open pit permits. Underground permits were never in question. It's just that now they're moving, and we expect that by the end of the first quarter, we'll have that permit. And in closing, I would just say that the country is over-discounted. The companies that operate in the country are over-discounted. Today, we're trading at about a 0.3 times net asset value. With a permit in hand, with not that discount where we are in the development of this project, we should be trading more around a 0.6 times net asset value. That'd be more typical. So there's a great opportunity, a great catalyst coming, which is the permit, definitive feasibility study, and some near mine exploration discoveries. So we do produce, right now we've been producing for 10 years, as I mentioned, and that's a large tailings reprocessing. And that operation currently is adding about 1.5 million a month of free cash flow to our operation. So I don't know if we have any time for questions, but
No time for questions.
No.
But I do encourage you to reach out to Steve, who's in the back, Corp Development, or to you, Bradley.
Yeah.
Which meeting room are you in?
we're in number 11.
Number 11. Thanks, Bradley.
Great, thank you.